Hey guys, welcome back to Your Nifty Guy. I hope all of you are doing well. Today's market finally showed its hand, not just with direction, but with momentum shifts and a couple of sharp signals that tell us what the market is preparing for next. The price action was clean in parts, tricky in others, but overall it left us with enough clues to build a solid trade plan for tomorrow. And if you have been following the channel, you know we have been consistently aligned with the long bias over the past few sessions. That wasn't guesswork, it came purely from reading the structure correctly and interpreting the tape with precision. Today's move once again validated that approach, and the way the market behaved around key zones further strengthens that directional conviction. In this video, I am going to break down exactly what those signals were, how the structure evolved through the day, and which zones now carry real weight. We'll talk about the key reaction areas, how buyers and sellers behaved, where traps got created, and how that set up tomorrow's high probability opportunities. I'll also share the exact setups I'll be watching and my approach to risk management for the next session. If you're serious about reading the market with clarity and trading with discipline, make sure you stay till the end. And before we dive into the charts, hit the like button, subscribe to the channel if you haven't already, and share this with anybody who trades Nifty daily. All right, let's get straight into the charts. Uh, Markets opened today with a big gap up, right? It was above the two zones with above which we were planning to create a long entry. And immediately after opening, market saw some selling. Now, this wasn't exactly selling if you are cool or if you understand about how to read tape. So this is with a good gap up. This kind of is a profit booking scenario, not exactly fresh new selling coming in, but try to understand there would have been people who would have long the markets here, along the way, right? And with this opening, they see immediately good profits, and that is what they book their profits, right? And this was our signal to actually create a long entry above this particular high. Now, markets after this particular profit booking came down, retested yesterday's high, formed a good double bottom around here. Now, you could have taken, so there are multiple ways in which entries can be taken, right? There is no such thing as right or wrong in the world of trading per se. So that is the reason why I'll explain everything that was going on in my head. Around here, of course, there was a good double bottom which had formed, right? But then I did not take a long entry around here because this wasn't exactly a clear structure change, right? A clear structure change would have been after this particular move, right? When the structure is changing from lower highs, lower lows to higher highs, higher low. So around here, the first higher low formed. Around here, the first higher high formed, right? So this is exactly where the structure changes, right? So that was the reason why I did not enter around this particular level. The second way of entering is if we simply plot Fibonacci from the day's high to day's low, which was created, and we mark out the zero point 0.5 to 0.618 zone, right? Which also roughly is any move above this particular swing would also have given us an opportunity to go long, right? This entire down move which came, market retraced more than 0.618 zone and above this, which also coincides almost with this uh, last swing high which was made. And any move above this could have been a signal to go long. Now, I did not even take a long entry around here. I'm just trying to showcase what goes on in my head and what was I thinking, right? I wanted this particular high to be taken out, right? Because this was the high from which market saw a good move on the downside, right? So this was roughly around 26,140 levels to 26,064 levels, right? And I wanted markets to take this level out. Now that this level was taken out in this candle at 10:45 a.m. Do we enter as soon as the market takes out this particular high? We can if we get a swing around here, which gives us a smaller stop loss. But then out here, the closest swing would have been around this level, making it a very big stop loss, right? So out here, we need to wait for the markets to give us some form of more confirmation and some pullback above which we can enter with a small stop loss. And markets were extremely kind today, unlike the rest of the days. Markets gave us this pullback around here. This was the entry trigger for us at the break of this particular high with a stop loss as small as this. But then a thing to notice around here, which I would also want to point out, if anybody who has traded today's market, on the spot, the entry came at, if we coincide this with the 1050 high, at in the 11:30 a.m. candle, right? But we do not make entries on the spot charts. Our entries are on the option charts. And for an in the money option, my entry got triggered at 12:20, right? So around this time, almost an hour after the entry triggered on the spot chart, my entry got triggered around this particular candle on the options chart. You can go back and backtest and check out today's in the money option charts, and you will be finding the same thing. The reason for it is with regards to the uh, volatility and other factors which determine the option prices, as well as supply and demand in the options. But then again, our thing is to follow our setups religiously, and once this particular high was taken out on the option chart, not around here, but around here, I entered into the trade with a small stop loss of just 14 odd points. And post this particular move, markets gave a very good, beautiful, beautiful one directional move. You did not even have to think about uh, solid training or trailing or booking your profits too soon. The I took my take profit at the 225 candle with around 58 points that I had captured. Now out here it might look a bit. I did not wait for this candle to close. By the way, I exited around when this particular swing was broken. Out here it looks a bit extended, the second head, but then on the options chart, this particular double top around here was a very clear double top. You can go and backtest it as well. And this, as soon as this particular low was taken out, I exited the trade in a good 58 points. Now it with a small stop loss of around 14 odd points and captured points of 58 points, it was a good 1:4 RR trade, which makes it a very good trade. But what makes it even better is the way market has given us a follow through, right? And if you have been a follower of this particular channel, you have been uh, witnessing me say that markets are my biases on the long side for quite some time now, right? And now those words weren't simply guessworks, like I mentioned in earlier in the video as well. Those were with regards to reading the tapes on the higher time frame, right? So that is what we do is a top-down analysis. We start reading the tape from higher down analysis, and we keep on marking our biases based on what the structure is on each time frame. And that is exactly what will happen if you do it regularly, is you will get that knack and that bias. Of course, we are prepared for anything. In case if the markets would have given us short moves on the downside, you know it very well. We were also prepared for those as well. But then, like I say, it is just a simple way of the more time you spend with the charts, uh, and the more time you read, try to read the structure. This is something which you can help you with the biasness, and that is exactly what helped us in our trade today. Simple execution, simple management, no much inputs, or after the trade was entered into, no much attention to changing anything or exiting early, or no panic as such was created in the trade. So a good trading day. But then what I'm happy about is the overall analysis or the biasness or structure reading that we guys did, and it has finally paid off. Uh, of course, there will be days when we might go wrong as well, but then it feels good when you go right. And we are nearing the all-time high now, which I had also said in a couple of videos back, where we can uh, be expected to get a new all-time high pretty soon. So let's see where the market goes on from here. But now for tomorrow, again, we'll keep the plan of action very simple. We don't need this and this now, right? We'll start with the daily time frame. All right. So on the daily time frame, we are above this was the upper red line which we had marked. We have got a very clear, solid, convincing close above this. We are just a small distance shy from the all-time high. Although a thing to ponder about is, although Nifty is at all-time high, are your portfolios at an all-time high, or how is your portfolio doing? I just wanted to speak to you guys about this. Although Nifty is at all-time high, this is just the Nifty 50 constituents who are making the move right now. If you go and see the sectoral charts about mid cap, about small cap, they are little bit on the lagging side, and hopefully they should be joining the rally soon. And that is exactly the broad-based rally which comes in, that is much more sustainable. And let's see whatever it is when that happens, we'll take a cue of it. Now on the 4 minutes time frame, this was the fib level that we had drawn yesterday, and we will simply be readjusting the same because we have made a new high. So this 4 hour fib level is now recalibrated at around these levels. All right. Now on a 15 minutes time frame, number one, everybody is gunning for the markets to go to an all-time high. Today was a good trending day. Yesterday was a good trending day. So if we see from the bottom that was created on Tuesday, we have rallied up quite a bit. This is a good rally. Markets are in, the RSI is also extended quite a bit. My first trade of the day can be a trap setup, which I always speak about, which we also saw a couple of days back. So this is exactly what we will be looking at. We want the markets to give us a bullish candle closing above today's high, and then the low of that candle gets taken out. This is something which can lead to a small scalping trade on the downside. The logic is very simple. People who would have missed this rally out of FOMO, they would be entering at the break of today's high. And we need the candle to confirm that, okay, the fresh buyers have entered into the market. And once the low of that candle gets taken out, it means all these stop losses would be triggering, which can lead to a move on the downside, which we can capitalize. If you are good with scalping and booking your profits very, very quickly, only then it is suggested that you take these trades. Otherwise, wait for proper simple setups, right? Now, I'll also mark a fib level. Sorry, I'll also mark a fib level from today's low till today's high, and I'll mark the 0.5 to 0.618 zone, right? This is the 15 minutes fib, right? If we are taking this, if we get all the conditions fulfilled for this trade and we are taking this trade, around these levels should be our targets. If we get any positive price action around these level, in case if we open flat, gap down, come down a little bit, this is where the place where we go long. Above this, of course, we are long. We are going to the moon. And below this, we are, of course, short. But then again, this is an earlier short entry. If we get any short entry around here, we should be careful about the kind of price action that we get around here. Now, since this is the 4 hour fib level as well, any positive buying opportunity around these levels is something also that we should look at. And needless to say, below this, we are again looking for a short entry. Now, below this, we are not exactly short, but then again, my biasness is on the long side only now. Until and unless on the daily time frame, I get a candle which fulfills all the three conditions, which is I get a lower high, a lower low, and a closing below previous day's low. I am not changing my bias. And that is something which I would suggest to all of you as well. Keep your trading extremely simple, right? Keep your trading extremely simple. Be prepared. Be prepared. Do not predict what is going to happen in the market. Simply be prepared for anything. And then let your homework, let your hard work do the talking. So, yeah, that wraps up today's breakdown. The market gave us direction, it gave us structure, and it gave us enough clarity to walk into tomorrow with confidence. As long as we stay disciplined and trade what the tape actually shows. If you found value in this analysis, make sure to like the video, subscribe to the channel, and share it with anybody who trades Nifty daily. And remember, consistency beats intensity. It's the small disciplined steps every single day that build the big results over time. I'll see you in tomorrow's video. Until then, trade smart, stay focused, and take care. Cheers.